Welcome to another video by the Market Maker SA. I hope you guys are doing good. I hope you guys are trading for a good, and yeah, welcome to another video. Before we continue, don't forget to like, comment, and subscribe. Don't forget to use that notification bell icon to be notified in case we drop another video. So in today's video we'll be looking at the confirmation trade versus the risk entry. So this is it's a very common thing that we usually use, especially when it comes to entries and confirming the trades that we want to take. And basically the difference between these two is, of course, the risk trade is a trade that is a trade that enters into your in this instance favorable supply zone or demand zone, and market just leaves there immediately. Market does not come back, and market does not come back after breaking structures, coming back to another sub point of interest and move away. Market just leaves. And that one as well, the reason why we call it a risk trade is because, as you can see, market coming into a specific area and market just leaving without any form of retracement back to a substructure to make the confluence stronger, or to make the trade idea even more valid and concrete. That's why we call it a risk entry. And of course, the confirmation trade is a trade where, of course, market coming into your favorable supply or demand zone, market moving away, and then market coming back into a creating a substructure and coming into your sub point of interest, and market moving away further giving that trade or that specific trade idea you're looking at more confluence and making it more concrete. So today we'll be looking at a few pairs, presumably Euro USD, GBP USD, and maybe one of the and maybe NZUSD, more or less specifically to what happened during this NFP. So you can see what market did here. Well, obviously on the Euro USD, market was showing signs of upwards movement. As you can see, we had our demand zones right here on the bottom, and market of course reacted away from them quite nicely at the moment. As you can see, there was a lot of sideways movement, a lot of liquidity that was being accumulated before market decided to take that liquidity out, and finally moving out, coming back, doing the same thing twice, and market moving away nicely. As you can see there, what happened, market left, came back. Let me just use this. Market entered there after breaking that liquidity, that buy side liquidity, came back, of course, taking out this sell side liquidity, dropping further down, taking out that same area that was responsible for taking out all these taking out this buy side and sell side liquidity, both these external liquidities, taking them both out. Market coming back into another supply zone, the same supply zone, by the way, and moving away. You see market has moved away, and market is showing signs. It's not showing signs of stopping. Market is literally going for these areas right here on top. So that's very important. Very important. And as you can see, once we identified that, we're basically looking at ways in which we can attack the market, ways in which we can enter the market. And as you can see, what happened here, we had this inverted fair value gap, of course, making the price range a bit balanced on the H4 or on the H1 to further find the confluence on the right hand side. While we had this imbalance that was then covered by this area, by this move by the market, as market came into the inverted fair value gap, ran away, came back, taking out all those people who traded that as a risk entry, because people entered that trading it thinking it's gonna go up straight to the moon. Market came back, taking them out. That was a failed risk entry, unfortunately. Then market came further down, taking out that imbalance, coming into this sub fair value gap right there, and then creating this of course, turtleneck formation, or in a more foundational term, we have our head and shoulders, inverted head and shoulders. And as you see, when market did there, market didn't take out this area, which I didn't like, because that was when I confirmed my confirmation trade. Market didn't take out this area, but as you can see, market then came back. Market took out sub areas on the lower time frame. See there, we have a break of structure right there, market rising up. People, of course, there are people who definitely took that as a risk entry, but no, we know better, especially after all this, especially after the previous liquidity sweep. So what happened? The market rised up, didn't take out those areas, took out those sub areas, dropped, didn't drop into a favorable point of interest, in my opinion, sub point of interest, but came back into this rejection block right here and moved away. And then you see when market moved away, there was really not a lot of sub confirmation structures for us to look at, unless we go down to a lower time frame. But that is more or less null and void. As you see, market went up from there on out. That was very, very interesting. See, market is rising right now. Not really expecting anything at the moment because there's no point of interest at the moment. The only point of interest we can see here is right here. There's downtrend order block on the H1. Love to see market taking out this area right here, dropping into that area and rising up. That'll be a very, very interesting trade idea right there, because this being a continuation trade in regards to the trend. So it'll be very, very interesting there for sure. And then you can see on on GBP, same thing more or less. Market came into an area of interest. Of course, that area was a daily fair value gap. Very, 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 very important there. Of course, that being the reason for this anchor formation being formed. Drop to your H1, market coming into that area. First showed signs of a risk entry. Market came back, took out all those areas, all those people who traded that. Firstly, dropped to the H1. Finally, we have a good break of structure. No need for sub break of structures, if you should say so yourself. If I should say so myself. Market came in there. Market took out those areas, creating that impulsive move, coming back. Then market came back into this point of interest right here. Oh, more or less rally-based rally. Market came into this point of interest, gave us 2 pins, making that W formation. Market rising up, that being our new reset. So obviously that being our confirmation trade right there, confirmation trade, especially after this. Trading it as a risk entry would have been a bit unethical in my opinion, but waiting for market to come back into these specific areas, but more specifically this area right here on top, confirming our confirmation trade. So confirmation trades are it's basically the second phase of the trade you're looking for after market has entered into your higher time frame, supply and demand. So that's basically it. You can see right now in this instance, market is moving away. We have level 1, level 2, looking for one more level to the rise, giving us level 3, and then we should be expecting market to take out that external liquidity high, and then look for further confirmation trades and further continuation trades. So this is the GBP USD, by the way, and yeah, you can see on the NZ USD, not really much in terms of what we're looking for. You can see right there, we're looking for downwards movement, we're looking for sell opportunity there, but you can see market then took us out due to NFP, so that area then becomes becomes external liquidity. Of course, we weren't taken out. We left the trade at the right time, but either way, very, very interesting right there. What caused all that? This being this order block right here, down kind of order block. Very, very nice stuff. Market leaving away very, very nicely. And you can see right there, no really confirmation trade. This was the only favorable risk entry you could have taken. Market would have been good, but it's highly advisable that you just wait for a confirmation trade. So yeah guys, thank you guys for watching. Don't forget to like, comment and subscribe. Don't forget to hit that notification bell icon to be notified in case we drop another video. Till next time, goodbye.